So let me restart it again with a very popular option which has been launched in the market from LIC, which is the LIC Jeevan Shanti plan, annuity plan. So in an annuity plan, you pay a lump sum amount, and in return, LIC will give you a regular payment for the rest of your life. This regular payment could be taken monthly, quarterly, half-yearly, or annually. In all, there are 12 options which can be opted for. There is an immediate annuity option and a deferred annuity option. We'll understand this with the help of a few examples. Now, before that, a bit of our take on annuities. So how it works is you pay a lump sum amount, which is called the purchase price of the plan, and basis that amount and interest rates gets fixed, and you get a regular payment for the rest of your life. Now, the advantage here is, or the main point of this plan is that during retirement, you don't want fluctuations in your income. So this plan helps you fix your annual income for the rest of your life. You might want to put part of your savings into this kind of a plan. So what happens is, suppose the interest rates in future go up, then you might think that this is a loss. So let's example, you put it in an FD and the FD rates at that point of time are actually higher. Then you might feel that, I got a bad deal because I'm locked in with this plan. But imagine a scenario wherein the FD rates have actually gone low. Then in that case, this plan is quite helpful that, today itself you've locked in the rates or the amounts which you will get for the rest of your life. So what I would recommend is you do not use your complete retirement savings to buy this. Use this as one of your options to generate an income after retirement. You should use some more liquid options, which could be mutual funds, FDs, etc. So annuity should be one of the options which are there. So now let's get into the working of this plan. So as I said, first you have to choose between two options, an immediate annuity option and a deferred annuity option. In the immediate annuity option, you pay a lump sum, and if you choose a monthly mode of regular payment, after 1 month you start getting the income. If you've chosen an annual mode, after 1 year you start getting the income. And there are 12 options to select in this. And please be careful that once you select this option, you cannot change it. So be very sure of the option which you're selecting. So you've got option A, which is immediate annuity for life. Then you've got option B, which is immediate annuity with guaranteed period of 5 years and life thereafter. I'll explain these properly with the help of an example later. Then option C is immediate annuity with guaranteed period of 10 years and life thereafter. Option D is immediate annuity with guaranteed period of 15 years and life thereafter. Option E, immediate annuity with guaranteed period of 20 years and life thereafter. Then you've got option F, immediate annuity for life with return of purchase price. Then option G, immediate annuity for life increasing at a simple rate of 3% per annum. Option H, joint life immediate annuity for life with a provision for 50% of the annuity to the secondary annuitant on the death of the primary member. Option I, joint life immediate annuity for life with a provision of 100% of the annuity payable as long as the annuitant survives. Option J, joint life immediate annuity for life with a provision of 100% of the annuity payable as long as any one of the annuitants survives, and return of purchase price on the death of the last survivor. So these were the 10 options which you get in the immediate annuity option. Now let's understand how the deferred annuity works. So in deferred annuity, you actually buy the annuity plan today, but choose to get the regular payments after a certain period of time. So this works well for, let's say, a young person or person with irregular income. All of a sudden, I have, 5 lakhs in hand, 10 lakhs in hand, and I just want to invest that and fix, a regular payment which will come to me once I retire. So I might choose to put 10 lakhs now, and at the age of 60, I might want to start receiving my regular income. So from the age of 40 till the age of 60, no payments made to you. But the moment you retire from the age of 60 onwards, the annuity starts working. Now, this is called a deferment period, the period in which you really don't get any cash. But there is a death benefit attached to it. In case you die, this money is paid back along with some guaranteed additions. We'll see how that works. Now, deferred annuity again has two options. Deferred annuity for single life and deferred annuity for a joint life. Now let's have a look at the different eligibility criteria for this plan. I think it's best if you just go through this table which is displayed. It'll give you the different parameters which have to be met in this plan, at what age you can enter, what is the maximum entry age, what is the minimum amount of annuity that has to be payable, etc. So just go through this table to understand things better. And this table has two parts, one for the immediate annuity and one for the deferred annuity part. Before getting into the examples to understand this plan better, let's just look at some of the other benefits which are there. There is a loan facility in this plan. Since you've paid a lump sum amount, LIC does give you an option to take a loan against this, but you can only take it after completion of 1 year. That means you've paid the lump sum amount today, you have to complete 1 year before you can take a loan. The interest rate of the loan will depend on the time which you take it. Every year LIC fixes a fixed interest rate for the loans which it gives. Then you can surrender this plan within 15 days of taking it. The moment, suppose you bought it today and within 15 days after receiving the policy document you felt this is not good, you can actually go and say that I don't want this plan and surrender it. But the option of surrendering after the freedom period is available only with option F. That is the option which has a return of purchase price. So be very, very careful in this and understand the examples which have been given in this video. That will very clearly help you know in which scenario the lump sum which you paid is returned back to you. And only in that scenario, this plan can actually be surrendered. And then, of course, this plan can be taken for handicap dependents also. So for all these, the examples, we'll consider this scenario. The person who's buying it has completed 45 years of age. He's investing a 10 lakh as the purchase price or the lump sum amount which will be paid to LIC. And then we look at the different options and see in each case what is the amount of money that he will get. So let's take option A, which is immediate annuity for life. So suppose Suraj has taken this plan, paid 10 lakhs, he's completed 45 years of age. Option A, he gets 74,300 rupees for the rest of his life. And the moment he dies, the payment stops and the amount of 10 lakhs which is invested is not returned back to him. So it's a great way to ensure that you get 74,300 rupees for the rest of your life. So then option B is immediate annuity with a guaranteed period of 5 years and life thereafter. So this guaranteed period of 5 years means that for 5 years, irrespective of whether the policyholder is alive or not, the payments will be made. And if he survives the 5 years, then the same amount will continue for the rest of his life. In case something happens to him, the lump sum amount is not paid back to the nominee of the policyholder. So for 5 years, the amount is guaranteed whether the policyholder survives or not. And if he survives, the policy continues and he keeps getting this regular income. So in this option, he would get 74,200 rupees as an annual income. So option C is immediate annuity with a guaranteed period of 10 years and life thereafter. So as I said in the last example, for 10 years, this payment will happen irrespective of whether the policyholder is alive or not. The nominee will get the payments in case the policyholder dies within 10 years. And in case he survives after 10 years, then also the payment will continue till the end of the life. So in this case, the policyholder will get 73,900 every year. Then you have option D. In this case, for 15 years, the payment is guaranteed, irrespective of whether the policyholder is alive or not. And then the payment continues in case the annuity holder is alive. So in this case, he will get 73,500 every year. Then we have option E, which is guaranteed payment for 20 years and life thereafter. Similarly, so there is a guaranteed payment which will happen for 20 years, irrespective of whether the policyholder is alive or not. In case the policyholder dies, the payment goes to the nominee. So here, 72,900 is paid out every year as part of the annuity. Option F is a slightly different one, which is largely the most popular one, in which you get a regular payment as long as you are alive, and as and when the policyholder dies, the lump sum amount which had been paid to LIC is returned back to the nominee. So option F is called immediate annuity for life with return of purchase price. So in this case, the amount which is paid every year is 65,400 rupees. So next option is the option G, which is immediate annuity for life, increasing at a simple interest of 3% per annum. So the pension is paid as long as the policyholder is alive, and it increases by 3% every year. So in the first year, the annuity holder will get 56,200 rupees. Next year, it will increase by 3%. That is 1386 is added to 56,200. Then every year, 1686 keeps getting added to the amount. So, it's an amount which is increasing every year, and it will be paid as long as the policyholder is alive. Then we have option H, which is joint life immediate annuity with 50% payable to the second member. So this is a joint, typically husband and wife can take it. So suppose the primary member dies, then after that 50% of the amount which was being paid to the primary member is now paid to the secondary member. And as long as the secondary member is alive, this payment will happen. And when the secondary member dies, the payment stops. The principal amount or the purchase price is actually not returned to anyone. It stays with LIC itself. So in this case, suppose the secondary member is 35 years old and you are 45 years old, the policyholder. So the policyholder will get 71,100 rupees for the rest of his life. The moment the primary member dies, the 71,100 stops, and the secondary member will get half of it, which is 35,550 for the rest of the life. And as long as the secondary member is alive, this payment is made. When the secondary member's life stops, all payments stop. Option I is the joint life annuity plan with 100% payable to the secondary member. Again, husband-wife can take this. So as long as the primary member is alive, 68,300 rupees is paid every year. The moment the primary member dies, the secondary member will get the same amount, 68,300, for the rest of that person's life. And when both of them pass away, all payments stop. The money is actually not returned to the nominees of both the members. Last option is option J, which is joint life with 100% payable to the secondary member with return of purchase price. So here, first member is alive, 64,900 rupees is paid every year. The moment the primary member dies, the second member starts getting the same amount, that is 64,900 for the rest of their life, for the rest of that person's life. When that person also dies, that means both the policy members are not alive, then this 10 lakhs is actually paid back to the nominee which is registered in the policy. So these are the 9 different options which are available with the immediate annuity option. Now let's try to understand how the deferred annuity works. So in this also, let's take the same example. 10 lakhs purchase price, age is 45 years completed, but the policyholder chooses a deferment period of 20 years. So I'm 45, I take this, I defer it by 20 years. That means I choose to receive the payments when I am 65 years old. So there are 2 options here, deferred annuity for single life and deferred annuity for joint life. Keep in mind, in case the policyholder dies within this deferment period, then there is a death benefit also which is payable. That means 110% of the purchase price or purchase price purchase price plus guaranteed additions which actually are added to this policy every year. So the guaranteed additions are basically an annuity rate which is fixed, and that gets calculated for the amount you've invested, and that keeps getting added to your policy and will be paid to you as a death benefit in case the policyholder dies within the deferment period. So let's take option 1, a deferred annuity for single life. So 45 years, I took this plan at the age of 45. From the age of 65, every year I will get 2,06,600 rupees as long as I am alive. In case I die anytime between 45 and 65, that is the deferment period of 20 years, I get the death benefit. The death benefit is higher of 110% of the purchase price, or the purchase price plus the guaranteed additions, plus if any annuity payment has been made, minus any annuity payments which have been made to me. So option 2 is a deferred annuity with joint life. So two members are there, a primary member and a secondary member. In case both these members die during the deferment period, then the death benefit is paid. In case no one dies, then no payment happens during the deferment period. After deferment period, that is from the age of 65, you get 2,27,200 rupees to the primary member every year. After the primary member dies, the secondary member will get the same amount for the rest of their lives. And when both of them die, then the death benefit is paid back to the nominee. So that pretty much explains all the options which are available in this plan. Very briefly, two options to take: immediate annuity and deferred annuity. In immediate annuity, there are 10 options. In deferred annuity, there are 2 options. In deferred annuity, both scenarios, there is a death benefit. In immediate annuity, there is no death benefit. Only in option F, there is a return of purchase price. Also, in the scenario where there is a return of purchase price, there is a flexibility in the way in which you can take the amount. You can take it as a lump sum amount, or you can take it to buy another annuity plan from LIC itself. And the third option is you can take it over a period of 5, 10 or 15 years. There is an interest rate benefit which you will get, which will be decided by LIC and will be declared from time to time. So that pretty much explains what this plan is. In case you have any questions on this, please drop in a comment and we will surely get back to you with details. I hope this was useful. If you found it useful, please share it with your friends. Thank you.